traders, we're going to start off with something a little bit different here in this free video. And this is a concept that I talked about in the Countdown Trader, the boats and tides issue, which you can check out at countdowntrader.com. And I'm going to show you how I apply this to determining if and when this move is really going to, this move lower in the broader markets is really going to gain some acceleration. And so what I'm going to do is I'm going to separate and look at a number of individual sectors. So I've got consumer discretionary here. Then I'm also taking a look at the staples. All right. Then we're also going to focus on tech. Now remember how important tech is. Tech is, in this case, XLK. That's Microsoft and Apple. And then finally, the sector that tends to benefit from panic, right? If we're really going to see a lot of panic here, that would be utilities, right? If we're going to see money just sort of hide out, utilities are something that typically we'll see flow into. Well, let's start off with utilities. Are we seeing a lot of movement into utilities? You know, that is this orange line here. Not really. I mean, it's ticking up, right? What I would expect first is a tick up in staples, this blue line here. And we are seeing that, okay? But I can't say that we're seeing the market flee out of consumer discretionary or even fleeing out of tech either. This is the XLK. So if and when I start to see, say, for example, the XLU and the XLP move higher while XLY and XLK move lower, we might have something to be concerned about. Now, I could also back out of the tech emphasis and focus on industrials and healthcare, for example. So I can see here, you can see here in healthcare, also these are all a lot of shades of blue. So I'm going to get rid of staples here for a moment. Okay, so healthcare and is in this lighter shade of blue. Industrials is in this slightly darker shade of blue. So healthcare you can see is struggling a little bit. And I'll be keeping an eye on that. I'd like to see healthcare stable because that's going to bode well for the S&P and for the Dow. And what I'll do, you know, not to get too into the minutia, but check this out over at sectorspdr.com. Take a look at these. I would also take a look at healthcare and financials. Financials moving higher bodes well for the S&P. So while we're getting this pullback, you want to see whether or not those heavily weighted sectors, think about tech, XLK, XLV, XLF, XLY, you know, are those heading lower or higher, right? And then do you see XLU and XLP moving in the opposite direction? In other words, weakness on those first four and strength in something like XLU and XLP. So that's kind of a general look at where the flow might be going. And then, you know, look, I'd be remiss if I didn't at least come back to where are we in the big picture of things. We've actually just traded back down to an area close to the 13 exponential moving average. We haven't even made it back to the 21. Is this weakness? Of course. But, you know, it's interesting how little tolerance for weakness the market does seem to have when we're building positions so close to highs. Now, in a parabolic market, that's something that A, we can do, and B, oftentimes we can get away with. But when the market decides to pull back or even sort of stall and find a range, you can see how bad it hurts the position. So I'm going to talk more in the premium video about how to combat this in this environment. And this is what I'm going to basically be honing in on. What are uncorrelated sectors and relative outperforming sectors? S&P is actually boding quite well, probably on the back of XLF, which is saying to the market, what down day, right? Who does XLF benefit? Not only at the larger index, the broader index level, but getting down to the individual stocks that are weighted within it. You can take a look at XLE holding its own. Again, which markets does XLE benefit? And then which individual stocks? And it might seem strange for a futures trader to talk about individual stocks and sectors, but remember, if you're trading the YM, NQ, ES, you are trading stocks and sectors. So why not look for relative outperformance, you know, a little bit more inside the index rather than playing it broadly? So we'll find where those levels are. And that's really why we started off at this level. and then we'll bring it back to this level. Keep an eye on some of these markets like IYT, They are not outperforming. This is what a lack of outperforming looks like. XLB I showed you is kind of flat, right? Here's XLC. This is Google and Facebook doing just fine. So think about where you can get a little bit more granular, all right? This bridges a lot of what I do in the futures room, but this comes right back to what I'll be focusing on in sector secrets. And if you want to know more about some of these things I'm talking about, check out the Countdown Trader free newsletter at countdowntrader.com. I'll see you in the next update.